From Kansas State University, this is Agriculture Today. Eric Atkinson here, and here's what's ahead. Standing by is K-State's Dan O'Brien to recap the grain market action during this first week of the new year. He'll comment in particular on the downturn in the wheat market lately, noting that the supply fundamentals still favor healthy wheat prices. Also today, K-State's Lucas Haag will look ahead to the 2022 Cover Your Acres Winter Conference, taking place week after next in northwest Kansas, at which he'll address the economics of soil fertility management and soil testing. He'll go over some of his talking points on that topic. And joining us later to talk Kansas agricultural weather, K-State's Chip Redmond. All of that is coming your way next on this Agriculture Today. Welcome aboard for another Agriculture Today. It's our Friday edition, and so first off, we get into the grain market scene with Research and Extension grain market economist Dan O'Brien along with us. Dan, the headliner here without a doubt, and most assuredly in the state of Kansas, the wheat market is off to a rocky start here in 2022. And this amidst tight world supplies, which has more than a few interested parties curious about what's going on here.
A lot of back and forth information that had come out regarding the soil moisture conditions in Kansas that would be interpreted very positively. Price-wise, negatively in terms of production prospects. A report came out of the USDA on January the 3rd out of the Kansas offices that topsoil moisture rated 34% very short, 38% short, and 26% adequate, and 2% surplus. So 28% adequate to surplus, and everything else, again, 34 plus 38%, you're looking at 72% short to very short. And of course, the growing crop we have right now would be winter wheat. You can see this same situation on our moisture maps, drought monitor maps. It's really a dry situation. And these numbers aren't looking at the area up to the north of us where we've got hard red spring wheat, durum wheat, and white wheat concerns also. So some real issues on the positive side in the wheat market. On the negative side, the issue that has concern of wheat producers and their organizations in the state and nationally would be the very low export numbers that we've had so far. And a good chunk of that has to do with high prices and where competitors are in the world markets. I think that the downside that just occurred is casting off concerns we've had in the last couple of weeks about potential Black Sea region geopolitical issues. I think in the last day or so, we've focused specifically on, hey, we've got really low exports for U.S. wheat so far. And focusing on that and had decided not to look at the factors we were looking at prior to that. Again, looking at Ukraine, Russia, what disruption there could do to export flows and having that uphold the market. So I guess in all of that, we've just got a lot of roiling and uncertainty in the market in the last day or so that's led us to see prices drop a bit of late. So, and when you look at the March contract, it had been at highs almost up to $9, about $8.90, $8.95, something like that. And that had happened in November. We had come down to about $7.75, back up to $8.75 down here on yesterday's close to $7.68.5. Part of the silver lining for those prices coming down like that probably is a trend towards the place where U.S. wheat now will be more attractive to buyers. Each dime that price goes lower, you're potentially going to attract more business. And so it just brings up the question, what would we consider a low wheat price right now? Well, if we're sitting at 768 and a half, and if we don't start giving impetus to some wheat export sales at areas like that, well, where do we need to go? Down to 650? When we were having these types of discussions in past years, we'd have 3s and 4s in front of those instead of 6s and 7s. So overall, you still have this situation in the world that as we crunch the numbers, and by the way, we have another WASDE report coming up on Wednesday where we'll get a new set of world numbers for wheat. And when you look at wheat supplies outside of China, world wheat supplies everywhere, we're at the lowest level we've been at, I think, since about 2007. Mm-hmm. So we still have a very tight situation in the world. And we have stood up, looked around, and seen that we are really not having a lot of wheat exports right now. And in the United States, with under high prices, well, we're heading towards somewhat of a moderation in those high prices. And if you're a hard-bitten old market economist like me, you'd think, well, within the not too distant future, we'd start to bring about some sales and to shift that situation around, given that there just aren't that many other places in the world that have wheat available, that have food quality wheat available. Australia has a lot of wheat, but they have a lot of damaged wheat too. That's basically feed quality. So we'll see where all this goes. I think as objectively as I can state it, the overall situation is still tight in the world, and we've had this delay that's probably temporary based on a lot on high prices. Well, now that we're moderating prices, let's see where we're at in the next 1 or 2 weeks.
Well, you can chalk this up as inherent to a volatile market in times of high prices. Let's hope it returns to the higher levels we've seen recently up until this week or so. Now, the corn market, to get 2022 rolling, Dan, actually has been to the upside.
Yes, again, we'll have that major report on the 12th. It'll be, yes, the World Ag Supply Demand Estimates reports, but also the annual crop production summaries. And if the USDA sees any major changes in acreage or in yields and production for corn, soybeans, grain, sorghum, it will come out in that report, because they literally do a comprehensive resurvey of everybody. There wasn't much of an effort. There was no effort in the December report to resurvey folks, but the USDA sort of hangs its hat on this report. It doesn't mean it can't change later on, because it has in the past. They've come in later off of stocks numbers and made some changes to these things. But generally, the market takes in these this year will be January 12th reports, and they'll say, okay, we've answered the supply question. And then they turn their attention to usage. So there's potential for volatility coming out of that day. So Wednesday the 12th is a big day for anybody. But coming into that, as you'd mentioned for corn, when we look at corn futures, they have been hanging around basically around $6 and not really that terribly volatile, not a lot of deviation around that. There's been an uptrend, again, for about the last 4 or 5 months, since September heading into October. Not high volatility in corn, still moving to the higher side. Relative strength indexes, which is a measure of momentum in the market, anything above 50% is generally positive. Well, we've got an RSI of about 58 to 60 thereabouts. Rate of change in prices on a weekly basis in the last week up about 14% over time in terms of an average of rate of change for corn futures. So that's been on a positive. And when you look at the soybean futures, which along with general positive support, you've got dry conditions that were reported out of South America and southern Brazil, good chunks of Argentina, that had been one of the major factors in recent strength. So in the soybean market in particular, but also in the corn market. So you look at the same type of trends in the soybean market, almost identical. Again, 14% rate of change in that market on a weekly basis, going up higher. RSI about 61, a little higher than corn. If anything, a little more volatile because of that soybean crop directly affected in South America, whereas if moisture short there, it could affect the second crop corn, which is a little more distant. Anyway, point being that now you're trading soybeans at about $13.75 to $13.90, closed yesterday $13.87.5. So we see some pessimism in terms of recent trends for wheat, but particularly hard red winter wheat. But when you look at corn and soybeans, things are looking strong, and a fair chunk of its weather market being weather watching in South America. I would add in just real quickly that, of course, we try to watch grain sorghum closely too. Grain sorghum prices, cash prices across the state ranging from a low $5.99 in a location we watched down in southeast Kansas, Columbus area. That's the low. The high is $6.63 at Topeka. Garden City at 614, 653, Salina, Colby 624, Hutchinson 638. Tremendous prices. Corn prices not far off of that, same situation. So anyway, strong feed grain cash prices, very strong soybean spot cash prices. Again, they're all across the state at the locations we're watching, 6 primary ones, all above 13. For wheat, even with the weakness of late, we still have cash wheat prices, a low of 718, high about 758 across these major locations. So still great prices, but some short-term trends that have our attention and really determine whether we feel good or not so good about what's been happening in the last couple of weeks.
One thing that may lend perspective here, Dan, though, as we see these kind of sharp moves in the grain markets, perhaps it's best to keep it in the context of a percentage change in prices. In other words, these wouldn't be as dramatic as, say, if we still had corn around $4, wheat around $3, and soybeans at $7 or $8.
Market sentiments are acting and reacting to news in the market that may change the sentiments for production and supply-demand balances in some positive or negative way, i.e. larger or smaller. So with that, we see some very, very strong, and I think we can unapologetically say that corn prices in the around $6 is a tremendous level. We've been higher at times, but here we are, January heading towards February, and we've got $6 corn. A lot of times we're just struggling to see any light at the end of the tunnel at all for that. And for soybeans, in a lot of years we've had pretty good prices for beans, maybe more than corn of late, but still we have beans in the teens, and it's not even anything out of the ordinary.
Dan, we'll talk again next Friday. Many thanks for now.
Eric, take care.
On the grain markets, grain market economist Dan O'Brien, K-State Research and Extension. We'll be back on Agriculture Today. We're back now on this Agriculture Today. It's always a pleasure to preview this next event because it has met with such immense success with agriculture producers over its history in the northwest part of the state, but certainly anybody involved in crop production would be invited to attend. The 2022 Cover Your Acres Winter Conference is all set. It'll take place just a little over a week from now, the 18th and 19th of January in Oberlin. One of the lead organizers of this event is with us now, Research and Extension Crop Production Specialist for Northwest Kansas, Lucas Haag. And you look forward to this gathering every year, Lucas, because of how well it's received and the impressive wealth of information it provides to producers.
You bet, Eric. We're really glad to be able to present this year. This is the 19th annual Cover Your Acres Conference. Now, of course, last year had a little different flavor. We did that virtually and actually had a really great response to that. Had people from, a huge geography tune in for that. But certainly it's nice to get back in person. That also allows us to bring our exhibitors and sponsors back together as part of the expo, the trade show that goes with it. And so, 19th annual. So we're really looking forward to that.
And what happens here, you have 2 days for the conference, but it's the same program provided each of the 2 days. So a producer can catch it all at one time or come back for both, right?
That's correct. So it is the same program both days, and so most of our attendees come one day or the other, although here in recent years we've got an increasing number of people. At our last live conference, I think we had something like 80-some people that actually signed up for both days, and so that's an option too if you want to hit every one of the sessions that we offer. But we've got 10 sessions that we offer featuring folks from not only K-State, but this year we've got speakers from the University of Nebraska, from NRCS, and then we also have a handful of talks that are presented by our industry partners as well.
And we want to give a sampling of the topics you've selected in just a second, but how this works, those sessions are presented more than once during a given day, so a producer can tailor their own program, if you will, by the schedule that you put together.
Yeah, that's exactly right, Eric. Each talk's given twice a day. So when our folks come through the doors, we get them a book in hand. It's an ISO. It's an 80-page book. It's got a summary from each one of the talks in there, and then on the back cover is a schedule in a grid. And so, the common thing is seeing folks with their pens and working their way through, circling things, kind of planning out their day.
And it's convenient because the location is the Gateway Conference Center there in Oberlin, and it is sizable enough to accommodate multiple meeting sites within the center. Folks can move around at will.
Yeah, it's really a great facility we have there in Oberlin that we're able to use, and we are actually the biggest event that they hold there in the course of a year. And so, yeah, we've got 4 different meeting rooms set up that the sessions are happening in, and then we've got the large expo area where our exhibitors and industry partners are set up, and where we have the lines for lunch, and then our evening hors d'oeuvres on Tuesday.
In just a second, we want to lend an idea of what this is about by talking of the topic that you'll be presenting on at Cover Your Acres. But what are some of the other prime topics which will be discussed at these sessions, Lucas?
Well, Eric, so we try and take a approach of a mix of, we try and bring in not only agronomy but also economics and some general interest stuff too. And so I think, of interest from the general standpoint, we always have a real strong response anytime we have anything with weather or climate. And so we're fortunate to have Jeff Hutton with the National Weather Service in Dodge City. He's going to give us kind of both a review and outlook for weather on the high plains. Of course, a rising topic over the past few years has been soil health, cover crops. And there's always this catch of, well, how do we make that work in our environment, in terms of our dryland cropping systems. We've got Dale Yonker and Madeline Stark from NRCS, and they're going to kind of take an approach of, Madeline's going to look at kind of the theory behind a lot of the soil health stuff, but Dale's been with the NRCS for decades here in western Kansas and has a lot of really good practical experience in how do we take it from the theory to actually making it work in western Kansas. And so pretty excited about that talk as well.
And there are several others which we won't take the time to list through entirely here, but you can go to a website and have a look at what the program is in total. We'll tell you how to do that in just a moment as well. But you are, in your session, Lucas, taking on the proverbial elephant in the room this year, the economics of soil fertility along with soil testing. Well, we know what's happened with fertilizer prices, so you've a great volume of things to talk about here, one would think.
Yeah, Eric, so I think that's a great way of putting it, is the elephants in the room. And really we've got, if we look at the fertility piece of this, and then also the weed control piece, not only the whole resistant weed issue, but this year herbicide cost and maybe even more importantly, availability. And so we've got 4 talks that really key in on this. We've got 2 on the fertility side with Dorivar, Reyes-Diaz, and I both looking at Dorivar's talk, where do I cut corners with fertilizer prices today? My talk's diving in, looking at the actual economics of how do we make those fertilizer decisions. And then on the weed control side, we've got Cody Creech from University of Nebraska, taking a look at the war on weeds, what are some new strategies. And then I joke with Sarah Lancaster when we gave her the title for her talk, rolling with the punches, weed management in 2022. And there's going to be a lot of that in terms of product shortages, product pricing, and so how can we be flexible and deal with that this coming year?
Just as a teaser on your session, when you're getting into the economics of the fertility program, the full-blown management of that program, what are some of the messages you're hoping to convey there? What are some of the ideas that you want to pass along?
Yeah, so I think there's a couple things when we look at kind of the bigger picture. There's a lot of focus on the price of fertilizer right now, and appropriately so. We also got to keep in mind, though, where we're at on grain prices. And so from a historical standpoint, yes, fertilizer is expensive relative to grain prices at these levels, but I don't think it's as out of whack as maybe some people. I think we're pretty fixated on the fertilizer piece of this. Mm-hmm. Part of that is we think about nitrogen as an example. I think we want to be careful about having too much of a knee-jerk reaction and really pulling back on what we're doing from a nitrogen standpoint. And we'll show some examples of where that's probably not the biggest source of cost savings out there on the table. What's been interesting is we've dug into this, is Dorivar and his crew, we've got a group of us that have been working on our new nitrogen recommendations, where the biggest money is on the table today is by being more efficient with our fertilizers. So any type of banded subsurface placement versus broadcast spread. and we can actually put some numbers to that, and that's where there's some serious dollars on the table where folks are trying to find some savings. We can pull back in the rate if we're applying that nitrogen in a more efficient manner.
But overall, you want producers to think about management without compromising productivity.
Yeah, because, we take an input like nitrogen, even at today's prices, the economic penalty of being short is still pretty large compared to the economic penalty of over-application. And so we've got to keep that in mind. And, of course, the piece that fits into this, and we've talked about this before, and that is the economic returns to soil sampling. And even, here several years ago, under more moderate price circumstances, we could easily demonstrate, the economic returns to soil sampling. And where we're at today, it's just simply a no-brainer in terms of the economic return on that investment.
Well, that session alone, in and of itself, ought to generate quite a discussion amongst the participants there on the economics of soil fertility management, plus much more making up the Cover Your Acres program. And before we get into the registration details, to quickly remind, the trade show is no small part of this.
No, so we've got, several large equipment vendors there. We always have Deere, Case IH, AGCO, all represented there, as well as, Surefire Ag, and then Nutrien all being kind of our platinum level sponsors. But then we'll also have, around 40 other exhibitors there as part of the trade show. So everything from chemical to machinery to marketing services to, really a wide variety of exhibitors that are all part of allowing us to offer this conference at a very reasonable price point for our producers.
All right. It's coming up soon, the 18th and the 19th. Tell us more about registration and the registration fee and so forth.
You bet, Eric. So everything that people need to know is on the website for the conference, which is www.northwest.ksu.edu/coveryouracres. And all the registration is online. We've got discounted registration up through January 11th. So it's $60 to attend on Tuesday, $55 to attend on Wednesday, or $80 for both days. We'll also accept walk-ins, people at the door, and it'll be $80 the day of the conference.
And the full schedule as well at that website. We'll repeat it one more time. But it's a tremendous event every year. It's in person this year, Lucas, as you say. Wishing you the best in conducting it, pulling it off, and thank you so much for joining us right here.
You bet, Eric.
And what he's been talking about, the Cover Your Acres Winter Conference for you crop producers at the Gateway Conference Center in Oberlin, set for the 18th and 19th, Tuesday and Wednesday of January. Please do reserve your spot if you can at northwest.ksu.edu. Cover Your Acres. Lucas Haag. He's the Northwest Research and Extension Crop Production Specialist for Kansas State University. And we'll be back with more for you shortly on Agriculture Today. Concluding this Agriculture Today, it's our regular stint on Kansas agricultural weather. We're in touch once more with K-State Research and Extension meteorologist Chip Redmond. Well, Chip, since we last visited, we've had measurable snow in Kansas. Whether that's made a dent in the drought, we'll get into in just a moment. But what were some of the readings around the state that you recorded at the Weather Data Library?
Yeah, so for snowfall-wise, it's been fairly meager. There was in southwest Frigo, southeast Gove counties, and northwest Ness counties, a bullseye of about 8 inches of snow that came out to about 0.4 of an inch. But it was a very small, isolated area. Everyone else saw, for the most part, in western and northern Kansas, anywhere from 1/10 to 2/10 of an inch of precipitation. And we did have some rain in the southeast to help folks get a little bit over 1/2 inch, but they average a lot more rainfall. So it's still below average for everyone despite the snow, and even the snow that was received this week, Wednesday night to Thursday, it was just a really, really dry snow. Just not much liquid equivalent in that. So not a whole lot of precipitation despite it being higher impact because it impacts driving and that kind of thing.
Well, then one would assume that the latest from the drought monitor shows us that we remain parched in a good lot of Kansas once again.
Yeah, since the last time we talked, drought has expanded quite a bit. In fact, all of West Kansas now is in at least moderate drought or worse, and abnormally dry conditions are over 75% of the state, or about 75% of the state. This week, we didn't have as much change, but the biggest change was to extend the extreme drought that's been introduced in southwest Kansas. It's now extended eastward along the Oklahoma border, all the way over to Comanche County, the far southwest corner of Comanche County. So we've got reports of cattle sell-offs in those areas, as well as no water storage at the surface because it's all evaporated, as well as no creeks running at all. So definitely a bleak picture for that neck of the woods.
We have been, Chip, dipping into colder weather of late, to lower temperatures, but seemingly not sustained over several days' time. That's the blessing in that.
Yeah, well, it is winter. We've been spoiled. December finished out, our average temperature for December for the state is around 32 degrees, and we were above 40. We had just substantial warmth, record warmth. It was the warmest December on record for the state of Kansas. And so these colder temperatures feel a lot colder, and they are cold, but they're seasonally cold. We're not breaking any records by any means, and we just don't really see a prolonged, sustained cold episode in the near future, at least. In fact, going into next week, we see temperatures rebound back into the 50s and even potentially 60s for portions of the state early next week.
And La Nina will retain her firm grip as far as keeping our moisture chances down?
Yeah, that's the million-dollar question right now. And we don't have any substantial moisture forecasted. There is a chance at some in the southern part of the state mid-next week. The details are really fuzzy with that, and I would not be surprised to see that diminish in probability, as well as a small probability of above normal chance of precipitation for the last week, or the second last week of January. The La Nina impacts are still prevalent. We still have northwest flow for the state, and it's going to keep us kind of transitional. It'll keep us warm and then cold, but just precipitation-wise, they're starved. We need a good southerly flow that bring that moisture up from the Gulf to really give us a good rain event, or if we can get a four-corner storm from the southwest to swing on through. Neither of those are really in the forecast anytime soon, and the overall pattern isn't conducive for that going into February.
Well, that's the reality of it. Chip, as always, a pleasure. Thank you for joining us, Woodsville.
Yeah, thanks for having me.
He is meteorologist Chip Redmond, K-State Research and Extension. And that closes out our Friday edition. Thanks for tuning in, and enjoy your weekend. Eric Atkinson for Agriculture Today over the K-State Radio Network.